we have pigs wearing like top hats and
Yeah.
suits when the rule from the start was no animals wear clothes,
Right.
So
Yeah.
it's just the symbolism of you know the way that that power is transferred, and the way that uh essentially oftentimes it's not the people who are playing the ownership role. It's the system and the power dynamic itself that is having the effects that people see on the market, as far as uh, the ability for people to manipulate markets and these things. Um, and in the book, essentially, the pigs end up becoming the new owners of the farm, and they now reap the benefit of the farm. Now, with L2, the pigs do earn the deposit fees, and they do earn the BUSD that is accumulated through the tax that is charged on the dog token when dog is swapped. Um,
Mhm.
but I do think the novel Animal Farm was uh, it had a lot of theming that speaks directly to our project, but it was
Mhm.
also a criticism of Stalinism and
Mm.
the Cold War style socialism, and
Yeah.
uh, that aspect of the Animal Farm uh, really is not relevant to our project, because crypto, uh, you know well, I say specifically DeFi, and specifically these kinds of projects are, capitalism in its highest
Yeah.
form, essentially, right? It's like,
Mhm. Yeah.
very little regulation, pure open markets. So the some of the downsides that we saw with the theming of Animal Farm, and the Stalinism theme, doesn't apply. And essentially, we have the all of the positives of the feeling of shared ownership, the feeling of pride of the system, that allowed for the increase of yield on the farm, without the downside of Stalinism and some of the political mechanics that
Mhm.
were at play in the Animal Farm book. Right, we don't have any of those political dynamics in our system. Our
Yeah.
system is essentially a pure capitalistic system that allows for decentralized ownership. Um, Essentially, a type of co-op system where the owners of the farm are the stakers of the farm, and it essentially has all the positives of a co-op type system without the negative, uh, you know, political dynamics that we would see in, you know, if someone tried to launch something like this outside of the crypto space, or
Mhm.
just in the theming of the Animal Farm book, and these other themings. But uh, essentially, uh, there is the dogs and the pigs token.
Mhm.
The dog token has a 6% tax on transacting. 3% of that tax is taken as BUSD and sent to the pigs governance reward pool. 3% of it is paired with dogs and added to the dogs BUSD liquidity pool, which is adding a further decentralized liquidity pool that is deeper, has more BUSD on the bid side, which allows for greater price appreciation, and sets a higher potential price floor. And every time someone swaps the dogs token, the potential price floor that the price could hit of the dogs token gets higher and higher and higher with
Yeah.
each swap. Now, there's an additional tax on selling, and this tax is burned. So that dog token is completely removed from circulation, sent to a 0x00000
Mm.
wallet. can never be recovered. And the reason why this is so important is because we have a dynamic emission rate that allows for the supply to be adjusted, and uh, it adjusts supply based on the current demand for the token. And when the demand is high and not many people are selling, that additional tax is not being placed on the transacting. And that's great because you don't want a high tax on transacting. You want people to be able to transact with the lowest possible tax possible.
Mm-hmm.
But when there's a lot of selling and the demand is lower, the decentralized dynamic supply control algorithm realizes the demand is lower, reduces the supply through cutting emissions, and now, since there's more selling going on, there's an additional tax which is burning more tokens, which is removing more tokens from circulation, and the DOGS token goes from an inflationary farm reward token to a deflationary farm reward token uh, that acts as the on ramp for ownership. And the reason why I say it acts as the on ramp for ownership is because the only way to get the pigs token through farming is through farming it with the dogs BUSD, dogs
Mm-hmm.
BNB, and dogs single asset pool, and also the drip BUSD pool. So essentially, the dogs token uh, acts as the farm token, and essentially, you know, you need a token that incentivizes people to join the farms and acts as a trading vehicle to add liquidity
Mm-hmm.
that allows people to get in and out and trade the farm. Uh, and it also acts as the on ramp for the governance token. Because after the pre-sale, the only way to get the pig's governance token is either to farm it with the core farms or to buy it directly off the market.
Mm-hmm.
Uh, now, um, 75% of all the deposit fees that get deposited into L2 get converted to BUSD and sent to the pigs single asset staking pool. 15% of the funds that are deposited go to marketing, and 10% go to platform fees. They're essentially they play for the platform cost, the way I was saying, because
Mm-hmm.
L2 also is generating yield on the back end through PancakeSwap.
Yeah.
So so essentially, well, not essentially, uh, literally 100% of the funds that are deposited in L2, the deposit fee that is taken from them, 100% of that deposit fee goes towards uh, either rewards for the pig single asset or marketing the platform or just platform costs. So there's
Mm-hmm.
no dev fee at all or development fee at all that's being collected from the deposit fees on L2. And this is what I mean by uh, it's a 100% transfer of ownership to the new owners of the farm, which are the farmers. There
Mm-hmm.
are the people that are staked in the pig's token. Uh, None of the deposit fee goes to development.
Yeah.
Now we have uh, all of the capital that is staked, like I was saying earlier, is instead of just sitting in the farm contract, the mastership contract, like what all the other farmers are doing, we are rehypothecating this collateral to earn an additional about 30% yield in the back end that's used for buybacks, used for marketing, used for development and platform costs. And essentially all of this, like on L1, is additional capital that is being earned that otherwise would not be earned, and is allowing for the sustainability of the platform with or without the leadership of me as a centralized developer. I could
Mm-hmm.
go away, and there's still all of the costs associated with gas and everything to run the platform is still operational. The deposit fees are going towards the governance stakers, so they have incentive to promote the platform and get new capital in it, and and even in the future, vote on proposals for additional development. Now, um, I'll get into that at the end because we're doing the governance voting in a very specific way that I guess I'll get into after I describe this. But essentially, uh, actually, no, let me get right into it right now. Essentially, the way that we're doing it is so a lot of times if you allow people to vote on proposals, or you allow people to make anybody to make a proposal and then allow people to vote on the proposal, often what happens is people will make proposals and vote on whatever proposal will make the most short term gains, uh you know you know regardless of what that will do for the sustainability of the project.
Right.
And because of this, the way that we're handling our governance model is myself and my partners work with the community and allow them to suggest uh, different functionalities and different ways we could go as far as development with the project for an additional L3 layer, and either through submission from the community or through something that maybe I think of an amazing new idea that could be developed for an L3. I'll pitch it to the community. If they seem like they're on board for it, then I can make a proposal, and the people who have the pigs governance token staked can then vote on the proposal. So there's still some leadership to kind of steer the boat to ensure that whatever proposals are made, they're proposals that will be sustainable and not only benefit the people that are in it after the proposal goes past, but people were in the platform from the start, from before the proposal was made. So we're doing that, and it's essentially it's a lot like a democratic republic, right? Where you have an ability for people to have their say, but you still have some leadership role to ensure that the proposals made are sustainable. And I would say, you know, we see how most governments handle this kind of thing. It's not well, but people can look at my track record and my projects and can see that any kind of proposal and development that's been made has performed extremely well and has been sustainable. And essentially, it what it does is it just allows people to have a bit more say, because if someone if we didn't have this government voting model and we just had it the way it's running now, it would work in basically the same way, where either a lot of people from the community would be asking for something, and then I would see, is it sustainable? Does it make sense? If it makes sense, then I'll deliver. Or if I come up with something that seems amazing, I'll pitch it to the community. If everybody seems on board with it, then I'll deliver. In this case, it's basically the same thing. It's just an additional step where people who have the governance token of L2 have a final say on whether the proposals go through or not, which I think is great, because it allows for some central leadership to ensure that it's sustainable and it makes sense and it's not just short-term gains. But people still, we still get to use like the intelligence of the crowd, and people that are investors have their say. And I think that's important if you're going to have a platform that is designed to have additional development added to it in the form of core contracts. If you're going to have that, you want the community to have